Hello friends, there's a Chinese proverb that says, may you live in interesting times. Like it or not, we do live in interesting times today. They are supposed to be times of danger and uncertainty, but for someone who's willing to take some risk, also of abundant opportunity. The global and Indian markets alike are currently going through such interesting times. The market's crash of nearly 30 to 35% has been a source of significant distress, but as is said, in adversity lies opportunity. Even during the global financial crisis of 2008, the Indian markets fell nearly 30% from its then peak to the bottom. But in the subsequent 12 years to 2020, investors who endured the fall saw markets recover with a 6% compounded return, and those who managed to take advantage of that fall could have seen as much as between 10 to 15% compounded returns in that same period of time. Markets, to our mind, present a similar opportunity once again. With many countries on the planet in an unprecedented lockdown mode due to the corona pandemic, a global slowdown in many parts and a recession in some parts is most certain. This will lead to considerable unpredictability and sharp contraction in corporate earnings for a short period. However, the coordinated action by various countries, including India, to combat the virus, to provide monetary responses that ensure adequate credit flow to stressed market segments so as to prevent this from converting into a financial crisis, and fiscal stimuli that makes up for lost income of households and businesses, make us confident that the recent correction in the market is now transforming into an attractive investment opportunity. More than thinking of what may or may not happen over the next few weeks to a few months, investors will be well served by thinking about what will happen over the next few years. The dilemma that confronts most of us today, however, is, have markets hit rock bottom? As someone rightly puts it, the bottom is the day before the recovery begins. So it is thus absolutely impossible to know when the bottom has been reached. What we can, however, confidently say is that conditions that create opportunities and make bargains available in the market are clearly falling in place. At valuations which are well below multi-year averages, we think many businesses are now available at below their intrinsic or fair value. It may not be the best time, but it certainly is a good time to invest and look at markets afresh. At Invesco India, we continue to take a balanced approach, being aggressive and conservative in equal measure as required. Our effort is to access value wherever it is cheap, but after taking sufficient cognizance of balance sheet and franchise risks in our investee companies. In the current environment, we prefer investors choose a combination of low to medium risk strategies. We recommend a staggered approach to investing and urge investors to take advantage of rebalancing their portfolios. We believe a combination of our multi-cap value growth portfolios, such as Invesco India Contra Fund and Invesco Growth Opportunities Fund, along with our highly consistent Invesco India Mid Cap Fund, offer investors the right blend of strategies to benefit from current market conditions. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.